Hi guys, welcome to the Savvy Money Show with me, your host Sean. If you enjoy any of today's entertainment, don't forget to smash the lovely like button. Helps with the YouTube algorithm and getting the video out to more people. If you haven't subscribed already, don't forget to hit the subscribe button and bell notification. You'll be notified when a new video comes out. If you want the stocks to stop sliding downwards, don't forget to make sure you hit that like and subscribe button. Just kidding. But if you're looking for a free trading platform on which to trade shares, don't forget to check out links in the description below. You'll get a free share worth up to £200 or dollars depending on the app you use. And for free trade, you only have to deposit £1. Now, all that old blarney's over with, on with the show. And yes, this is what the stock market looks like at the moment. But today we are comparing reits. Now we are looking, sorry about that, there's something else, another video I'm looking to do. The requirements to be a REIT. A REIT has to return a minimum of 90% of the taxable income to shareholders as dividends each year, which is why people like them so much. Invest at least 75% of total assets in real estate or cash. Receive at least 75% of gross income from real estate. So they can't just invest it in the market unless it's in another real estate REIT. Have a minimum of 100 shareholders. So it can't just have 2 shareholders. Now, the pros to a REIT is it gives steady dividends, high returns, liquidity, lower volatility that traditional stocks do not have. Now, with the steady dividends, we know the one that gives the most regular realty income, for instance. And people are pulled into that now, thinking if the second wave comes, at least I'll have had my monthly dividend before then, and it won't have got cut. Or if the same thing happens again, at least I'll have had 11 months of dividends before they cut the 12th month. Whereas with the other ones, I'll have been waiting a whole year or a whole quarter for a dividend, and then they cut it all of a sudden. Now, cons. They usually have a high debt ratio, such as, I'll be talking about high debt ratio later. The low growth and capital appreciation, high returns. As you know from some previous video, if a company returns a high percentage of their capital, it doesn't give them a lot of room to grow, and the dividends are taxed. Now, this is what was going to mention. How can rates have higher than 100% payout ratios? It happens because it gets a number of tax write-offs. REITs have, like depreciation. Now, we are carrying on. And for those who are asking me why I've gone out of some REITs, such as commercial property, I just show them this. And saying that, some of the REITs I've gone out of because of what's happened today, I've jumped back in there and I've made a tidy profit. Two things I never do is I never turn down a profit, and I never judge anyone else for taking a profit, even if I stay in. Anyway, we are going to be looking at a number of REITs. I've already compared these, so you don't have to through them. I've been looking at ones that have an average of 91.7% payout amongst a lot of them. So I'm looking at Gladstone Land Corporation, ticker symbol LAND, Industrial Logistics Property Trust, ticker symbol ILPT, Getty Realty Corporation, ticker symbol GTY, Independence Realty Trust, ticker symbol IRT, Anworth Mortgage Anworth Mortgage Asset Corporation, ticker symbol ANH, Iron Mountain, ticker symbol IRM, American Tower, ticker symbol AMT, Innovative Industrial Properties Inc., ticker symbol IIPR. And one thing to know about that one is it gives a 5.8% dividend, whereas the other ones give an average of 4.8%. Global Medical REIT, which is ticker symbol GMRE, Medical Properties Trust, which is ticker symbol MPW. Now, I've gone through all of these, and I've gone through the dividend, cash on hand, the debt, the payout ratio. I've gone through intrinsic value, the analysts. I've gone through the properties values, which would be covered by intrinsic value to check them off. I have gone through, well, let's just say I've gone through a lot of stuff. And bear in mind, you don't have to take my advice for it. But I've come up with my top 4. And I haven't bought into my top 4 either. I bought into 3 of them. And I've also bought into other REITs, but just so you know, my first one is Gladstone Land Corporation, ticker symbol LAND. Now, it has its issues, but I think it is going to be one that's a great growth stock, and the analysts agree. I just think it's one worth looking at further. My second one was, let's see, MPW, Medical Properties Trust, and we all know that medical REITs are a good one to go into. It's trading at a discount, so it should come back. It's a $6 discount, and it's a 5.38% dividend. And if you get it soon, you'll be qualified for the dividend, because its ex-dividend date is 16th of June. Its beta is under 1, which you'd expect, but I think it's going to be a good company. You'd be getting 27 cents a share on that, and it's collected over 96% of rent, and it's increased some of the rent, which is something they don't tell you. But something that's under $19 a share getting 27 cents dividend is quite good. Now, my next one is ticker symbol GMRE, another medical REIT, which is also a discount. They've also increased the rent, and you'll see here how it should go up 50%. in value. Now, you've missed the last dividend, but the dividend yield should be 6.35%, and basically this has gone down because it missed its earnings per share, but they think that it will gain it back in the next one. However, beware, if it doesn't gain back the earnings per share in the next quarter, it may go down even further. That is why it's one of the riskier of the top four. Now, AMT, ticker symbol AMT, American Tower. This is one that's going to be a growth REIT. Holds over 40,000 towers, cell towers, which it rents out to other providers. It's going to be one of the main providers of 5G leases. There's going to be three main providers, such as Crown Castle and the likes. This is one that come out on top out of those three, and you see it's dipped down a little bit, only a little bit, nothing to worry about. You will have growth on this, you will have income on this, and I just think it's worth going into. You got a small dividend, but I don't mind that because it's going to be small dividend in comparison to the other ones, high PE ratio in comparison to the other ones, but that's because it's not a traditional REIT. It is a 5G communications REIT, so you have to you have to bear in mind that. Now this is classed as by Motley for one of the two stocks you might want to buy. Now, I think I have actually bought AT&T and American Tower, but I think if you want to go into 5G, I wouldn't just buy two stocks. I would try and cover US and Europe. I think cover AT&T with two of the stocks are drastically cheap. AT&T, BT and American Tower. BT covers the UK. It covers 80% of the UK, and it also covers a lot of the Europe, PM1, and that gives you access there. And I just think that way you're covered with 5G. Anyway, I was also looking into a couple of other stocks, a couple of other REITs, but I haven't quite done enough, looked into enough into the background of them yet. But these are just going to be more growth. They're trading at a discount. So you've got MFA Financial. As I said, I haven't done enough research on them, and these are ones that are at a minimum of 300%, can climb 300%. Now it's a PE ratio of 3, and you have IVR, which should climb 450%, and a PE ratio of 1.8, dividend of 37%. Bear in mind, these last three I haven't gone all the way through them the way I have with the others, but they are ones I am looking at, and I will go into them, and I'll let you know when and you've got Redwood Trust, which gives a dividend of 18%. However, this uses 110% of its funds, like I mentioned at the start, so it gets the tax breaks, and it has a beta of 1.19. It just means it's been beaten down a lot during this time. So please let me know if any of these you're going into, and let me know if you're in them already, or if there's any you think I've missed. And don't forget to hit the like and subscribe button. I'm nearly at 50. I want to get to 50 so much. So does my son. As I said before, he gets £1 for every like and subscribe I get. And I'll see you in the next video. Goodbye.